Hello, everybody, and welcome to the Plus Three Futures and Commodities show. We are recording here on May 3rd, Saturday morning at 11 a.m. East Coast time. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great.
Barry, the big question on my mind, and I think the theme of this show, is it sell in May and go away, or is it buy in May and stay to play?
Oh man, that's a great that's a great theme. Yeah, yeah. State of
I mean,
play. hmm
that's what we got to decide here, right? I mean, it's a big
Yeah.
question, not only in the S&P, but in a lot of market.
And especially in the S&P, Nasdaq, and all of this, right? We're running right up into some kind of a high. Yeah. Do we sell in May or buy in May?
Yeah, let's see. Let's see.
Yeah,
So
let's
we
take a
got
look
the
at that.
I know we got a lot to cover. So that's the calendar day S&P. Let's see what that's telling us.
Well, this chart's helped us with a lot of things, a lot of the points in the past.
Hmm?
So let's continue. We'll open with this one. Um, And just a little bit of just going back a few days, you guys can, of course, always go back and check the old videos and, everything's there. But I remember talking, spending some time on this 54.17 level, 54.25, right there
Hmm.
at the 90-degree level. 54.17 was right below that. It
Hmm.
was a different level. So anyway, the point of the 90-degree level was to see if we can get on top of it, and that if we can establish above that, obviously then we can run up and test these other levels. And so we did. I mean, obviously we got up on top of it, held above, and then we had a sort of a good retest on Wednesday before we, sort of what I would call like a flush, and before we ran up.
Hmm.
And so far as the squares go and how I'm looking at these things, we got above the 90, which is a big deal. Once we do that, this is based on the cash. Once we do that, we want to monitor the situation to see, are we consolidating above? Are we, what's happening above that, right? Are we consolidating? Are we retesting the breakout? What the behavior is like. So in this case, we held above nicely. We ran up to the 55.82, flipped around, and came back to basically test the breakout lows, and of
Hmm.
course reversed immediately and started running up. SPX, we basically gapped up, and we stalled up at the 3/8, which is the important level. 56.73 is in that same area, but the 3/8 is exactly where it stopped. So we'll go with that. So this is what this is why I was saying, we're running right up into May, beginning of May. I mean, that sets up so perfectly. Are we going to sell in May? I mean, I think running up into a high in the beginning of May sets up
Absolutely.
sets up nicely. So so we'll look at that. We'll look at what the evidence is and what's happening here with when we pull up the rest of the charts. Far as the SPX goes, I mean, as you guys know, if been watching us for a while, we play one segment at a time. We're not, we usually don't go too far into the future. We keep a pretty tight horizon. And since this is a weekly show, we generally stick to, 5 to 10 day kind of window when we talk about things. So now that we cleared the 54.25 and we cleared the quarter square, I would say any kind of a pullback that holds above the quarter square, it happens to be right at 56.06 and 55.82. Let's mark that as a zone, just for next week. This is not that important of a zone, but it's just to make the point, right? So we can sort of focus where it matters. Long as we can hold above this, I think we can continue to move higher. That's the idea here. And where is the next level of resistance? Well, if you guys remember, this is where we kind of isolated the first counter trend high back in March. So once this initial low came in, we talked about unfinished business and why it didn't quite get to 90. We were waiting to see where the counter trend ends, right? We got into the 3/8. You can see how we stalled here for about a week, gapped, and reversed right on the 50%. And definitely in the zone, but exactly at the 50% level, you guys can see. And from there, we had the big drop. So we're kind of entering into that zone again. And I'm not expecting identical outcomes, but we have to be aware, right? Now, this 5673 zone, we've stalled there before. And this is a kind of important zone. This has been here probably since 2024. And the reason for that is we had a high come in, if you guys can see, back in July, right on that level. And from that high, we dropped right into August. It was a nice ABCD down. And we rallied. And once we got above it right here, see, and we came back and retested it before we, made the eventual move up into the highs in December. So it's a key level. It's a really important level. And this is why going back and seeing how these things reacted is important. And we could have turned, back in March, we could have turned here, but of course not without a false break, right? False move to the other side. But the great thing is when the false break also ends at an important level. So there you go. Now, we made a pretty quick move from it, to go 3/8 on these squares. It doesn't, back in the day, it would take a long time. It wouldn't, we made this in just less than about a week. So it's 3 days really from the 90-degree level, roughly, right? To
From that
3/8.
reversal, 3 days.
Yeah,
Yep.
yeah. So we're, it's blistering speed. So let's see what happens here. This is why the level is important. It's because of the historical sort of value of this 5673 area. And I know you guys are always yelling at me for, okay, so 5697 is a 3/8 level. Let me put that in here. There you go. So we're looking at that to be sort of a buffer, because obviously if we grind through that on Monday, Tuesday, then, up to the next level is 50% level, right? And then we have to kind of manage above that. We'll see how that goes. But for now, we're looking at the high, because it just happened to end up at a key level. And any pullbacks, as long as we're holding above 5582, this level, above the zone, I think the push is to the upside. So what has to happen for this to flip to the downside, meaning we started a new leg to the downside? We'd have to have price stall at a key level, and then we'd have to have it trade below 5582, and maybe even stall below that. So that's, sort of like what happened here. This is a rough example. We turned at the 50% square, we dropped, and obviously dropping through this level, we can catch all that on the short time frames, but the pullback right to 5697 here, right there, was, that's what we mean by stalling below, right? It just can't get above it. So it kind of did that on the day that we broke also, the second day, the big red bar. So here's another one. So the reason I'm going on about this is because we've had some key levels here, like I showed you guys last July and also September. So it's really important. And what happened in March was kind of hidden in there, but that's what really happened. Was it stalled here. We had a false break, and the reason how you know that is because the next counter trend after this drop also happened to be on the same line. So I think that's, those are sort of a little bit of hints you can see how price is playing out. How is that, Ben? Does that make sense? Kind of, I'm trying to lay out a reasonable sort of a plan.
Absolutely. And look at Friday's high right there.
Yeah, right there. So, all right, let's move on to, okay, here's an E-mini continuation chart. Let's take a quick look at this. Now here, I drew up this zone, I think last week or the week before, and we ran right up into it. And stalled pretty much at the 270-degree level, coming off the low in 2022. Also an important level, right? Because this is where we talked about last week, how all the overhead really begins at this 5750 level. And this is where everything else is sitting. And if you really wanted to push up a little bit, we drew up ABCD last week, and that ends. Then you were talking about this ABCD, and that ends around 5827.
Yep.
Also, we also have a Gartley working in here. If we take this high, this is the XABCD goes up in there, or you can use this XABCD. Anyway, we have the ABCD. We have enough for working Gartley. So, and boy, this would be a classic Gartley setup. After a big drop, we set up a Gartley um, or a sell. So it's possible, not that it's 100%, but we have to keep it in mind. All right, so that's what's happening in the E-mini. 57.51 is really the key level here, the 270 degrees up. And if you guys notice, I'm using sort of the bracket, like in the cash, I'm going off the high. For this chart, I'm going off the low, older low, the big low in 2022, just to make sure that we're sort of covering all the angles, right? So that's the reason I do that. Otherwise, we'll get the same look from everywhere. We really can't get a good sort of perspective. So we're coming up into the same area. That's the zone we marked. So let's see if what we do here. If we stall here, we really want to be watching closely. 56.82 is a level we don't want to get stuck under. Again, a good example of getting stuck under would be this bar on April 2nd. You can see how we ran up into it. Intraday we really couldn't do anything, and failed. And from there, it was just straight down. So these areas really play a key role. And going back to, I was showing you guys an example in July. You can see how and I had drawn the box back then too. And so you see there's a consistency in the approach, right? And that's why it's easy to read the markets, because you're not continually changing your perspective by using different things.
And it's historical structure that shows, there was a battle in that area before multiple times.
Absolutely. And the reasoning behind it, or the reasoning. And you can see it was the same level. I mean, you can probably eyeball this too, if you can eyeball that, but it's not this. It doesn't really give the same meaning as really seeing the grid. But then you can see how it came back to test it, and how it came back to test it, and then shot up, right? So it's all very beautiful. All right, and even in the highs, we didn't really exactly stop at the 50%, and then we were running a little bit above. And remember, we had this ABCD drawn up and saying, "Wow, what an ending." And sure enough, we got a hell of a show afterwards. Really, the point we're really catching is we're between that high and the low we just passed. So we're kind of in the middle, and the middle is like the worst time to be trying to figure out, what happens next. And the easiest way to get through the middle, navigate the middle, is by looking at the levels and price action, and of course the structure around the levels. And that's why we're going to be looking at the zone, and to see how we settle. If we settle above 56.82, are we doing it? Can we push above 57.50? Are we stuck under that level? And what's the price action? So this is a key level for next week. Watch this zone, watch both levels, and see how price handles it. Because we're not necessarily bearish, and we're not necessarily bullish. If you guys watch our posts on X every morning, where some days we're looking at the short side, some days we're looking at the long side, whichever one that's going to be, makes sense to trade. So anyway, we'll look at the 30-minute chart in a little bit. That's the continuation chart. Here's the front month. So front month, I left it last week. I drew up this zone, another zone here, because I said, look, we broke out, but I'd like to really give it a little bit of room to confirm that, to see if we can actually hold it. And this 56.05, it's about an eighth of the square, and that's a good cutoff point to check. And as of Wednesday, it was crazy. We ran up there, tried to push, failed, and started dropping. 55.17. We blew right through that, and reversed. But you can see how the stall happened right in that area. I think more importantly, what happened afterwards, after we had that blistering rally back, is on Thursday how we managed to hold above this zone, and more or less above 56.05, right? Let's say 56.05. We more or less managed to hold above that, certainly above the zone. So I think both days to be tested like that is positive. Which opens up the next level, 57.95, and I must have written that there for some reason. We could have looked at it as a target, because it's a quarter level, And of course, we make it in one day. That's the style these days, right? And to go a quarter level, back in the day, it could take 2 weeks. So now we do it in half a day. So anyway,
That's 57.05, right? Not 95.
I'm sorry, it's 56.93. Let me edit that. I'm talking about this level here. And we were coming off the high. 57.50 is right there.
Mm-hmm.
Yeah, sorry, yeah. 56.90. What did I say? 93? Yeah.
Yeah.
And the ABCD based on the front month is up near the 50% level. And that price level is 58.25 and 58.74. Hold on. That must have been from the old contract. All right. So for next week, we have some evidence from the cash charts. Now we're looking at the futures, so we know where the upside is. We know where the ABCD target is. And from this perspective, I think we ought to be watching this 57.93 as sort of a bull bear line, clearly. If we sort of settle above that, start gunning it, 58.74 area, or the ABCD target becomes the next level to watch. And even if we reverse off of that, this level is pretty good. So we want to watch to see if we can hold above this. This is all basis the daily. So it looks rather bullish until we get to some of these points and see if we can manage to hold above them. Yeah, that's it. That's it for the front month. Dow Futures. All right. So last week I was talking about how this little triangle's forming right on the 50% level, and Dow's really not sort of getting pushed or pulled like the bigger indices, and to see which way this triangle is going to break. So sure enough, we kind of started pulling up, and then we had the Wednesday event and to reverse and go on up. And that Wednesday event was sort of even though we were kind of expecting it, I even mentioned it on X, like, hey, we bound to get a head fake today. And sure enough, we got it. We got a reversal. And that's kind of it's a type of a flush before we start going in the other direction. And so that would have been a good indicator that Thursday, Friday would be bullish, even though it's more of a grind. Anyway, my point last week was about this 41,348, saying, well, even if we clear that, sure, it's a little sticky at the 50% level. And if we clear that, really the key is 41,384 is the next level, and the ultimate level where we had all that overhead, because this is coming off that 22 low, also the square. And since we squared out and everything at the high, I'm going to continue to use this. So if we can get about 41,384, then looks like 50% is the next level to test. And that's 42,600. See if that's correct. Well, 550, 550, 600, right in there. So let's watch that and see if, what happens when we get there. But for now, if you can clear 41,384, I think the push is to the upside. And then we have to take on this 42,550, 42,600 level. That's sort of the plan. I can't think of anything else. I mean, obviously there's an ABCD here as well, so we don't have to draw each and every one of them. We have an idea where that's going to be. And let's take a quick look at this weekly. We've been watching it for a while. And last week I left off with this 55 level and this is coming off the 2020 level, the COVID low. So it's a good place to track this. So 55 was the level we were watching to see if we're going to fail, might as well fail there. It's just a good area to do that. And we didn't poke a little bit, try to be there like we did, back in early 24. You can see how we went up above it a little bit, and then we reversed outside reversal the next day right there. And we dropped. Here, unlike that, we cleared it, with some strength, right? So now there's enough cushion under it. So 55 basis the weekly cash chart. So that's what this is, basis the weekly cash chart. I think 55 is going to be a really important level to watch. if any kind of a pullback or spike down, false move, however you want to phrase it, comes through and we hold above that level and we manage to recover, I think the market's kind of flipped to the bullish side. There's no question. If things were really weak, it would have happened below 55, which where we were the last month or so. And now we're flipped above it. I don't think any of this means that there's no danger and we're, sort of the balls to the wall long. It's not that. It's just we have to kind of go with we have to kind of go with the trend. And we're monitoring those levels, like where these things can end, based on the daily levels that we just talked about, the highs and the targets and the ABCDs and all of that. So let's continue to watch this. This is it's the weekly, so we can check in every week and see how it's doing. As we do every week, let's take a quick look at the 30-minute chart that I post every morning on X and comment on it. And you can see, well, here's that little, here's the flush on the 30th that we got. And it came in perfectly because, we had a like sort of false break about 55.66. We had 55.94 as resistance. It's right there. It's grayed out. And the pull, counter trend after that just failed to hold above 55.66. And this is what we mean about holding above or not, right? So after we hit this and we come back, you would expect it to hold above and then move. And that would be bullish. And instead what happened was we dropped down. I don't know if you guys can see this clearly. If you look at your charts, you can see there was a down leg and then false break to the upside, and then we dropped. So once we took out that initial low, it was all, parachutes. And I was expecting these lows to hold at least 55, 5,500, 5504 level was support. And the next level down would be the zone that we worked before, back around the 25th and all through here, early April. Anyway, we held it there, good structural support, flipped around, got above 5504. And then we were able to manage to get through 55.48, 56. And this is what we talk about, every time about, once we clear a level, it normally goes to the next level. So here we cleared it. Then it became 56.58. We tapped it, really couldn't, do it. And we were looking for backing and filling and support around 56.12, Thursday, Friday. And we got it, the market held, ran up, higher lows, and eventually we able to break the trend line. And in the triangle, of course, we kind of did a false break to the downside, right? And then flipped up. So all these false breaky kind of moves I think were signals that we were going to push higher. And eventually that pullback, you can see how we came back on Friday before trading higher, right? We had the initial bump up, then we pulled back to test the 56.58 level, which happened to be this upper trend line. The original trend line, I had it from here. I didn't duplicate it, but it's here, right there, and moved higher. So 57.28, 57.50 lines up again on the 30-minute. Next week, this chart will probably look different because I'll be changing the squares. But for now, 57.50 is the level to watch, and it's an really important level. Above that, we get to the old highs pretty much. So, then we get to this 58.19, 57.92, 58.19. So that's the full square. But obviously we had to clear the 57.50 before we can get up there. And the way we do it now, any kind of a pullback ought to hold above 56.58, which is plenty of room for, pullbacks and consolidations, bullish, above here. But we'll look at the balance when we get to the next level between 57.30 and 57.50 to see how to work that. And if we consolidate and sit above that, we have more to go. So to sum it all up, I don't know if, sort of a simple approach like selling in May is going to be necessarily going to be easy this year, because this year is not like any of the other most of the other years that we can remember. So
Mhm.
everything's a little upside down, and it might be the binary that's going to work out, right? Maybe it's buy in May. Maybe it's a little bit of both, like we were laughing about earlier, right? Maybe a little bit of selling, a little bit of buying, and give everybody something to chew on. But either way, now we know what to watch on for targets and upside resistant levels, and we know what to watch on the downside. I think that ought to keep you guys pretty well informed, right, for next week. Want to add anything? I know you're going to cover Nasdaq and Bitcoin and a bunch of commodities today, so we'll take a look at that
No,
in a
I
little
think
bit.
it's like we were discussing before the show that, the bulls just can't sit there. They got to move. And the bears got to get it down below those key levels. So
Yeah,
it's not going to be just low. Let's just bounce it back and forth in a short little range. It's going to move one way or the other.
right. And it's all sentiment. I saw a funny headline on Zero Hedge the other day. It said what it takes to keep a bull market going are bulls. So,
Yeah, that's true.
as long as there's a supply, uh, let's see what happens. And we saw, we cleared some key levels this week that we were watching, and so it's winding up, and we'll continue to watch it. So both sides, we'll have to watch both sides. Unfortunately, it's a lot of work, but that's what we do, right? All right, let's move on to bonds. So bonds, basically, we've been talking about this 45 degree level for the last week or two, and this 16 and a half. It's about, can we hold above it? Can we hold? Are we getting stuck below? I guess there's this third state, which is, we're stuck in it. So, which is kind of what happened to bonds. We kind of got stuck at the level, and looks like we eventually started trading lower, which is kind of what we've been talking about, right? We've been bearish bonds, and you can see, this is all kind of sideways action, but you can see off of key levels, it tends to turn, and the big, and you can see that, just this year, over here we failed, then we got on top, failed here, uh, stayed on top, failed here. So it is failing at the right places, failed there. Now, if it fails here, now we have to see what the counter trend looks like. If it's 1 or 2 days, then obviously we have more to go. And I've been talking about this low backing back in January being retested or taken out. We'll see how fast we do that or how slow we do that. Let's take a look. We didn't talk about the other weekly charts. Not much to add to these, really. This is the S&P, going back to the S&P. Yeah, I think we can cover it next week. I think we talked about it enough. So bonds on the square 9 chart, you can see 1722 we reversed on the weekly, and our normal regular bond chart using the 2020 high, coming off the 2020 high with the score of 72. This zone is the consolidation zone, right? We kind of labeled it last time. And longs are below 144, bonds are weak. Basis are weekly. And we do have a ABCD. I'm not sure if that's so valid now. We could go ABC now, probably. But I mean, the reason for that, my eye even thinks about that, is probably because I sort of have a bearish bias there. So that could be a target. I mean, that would be a blowout target, right? And the reason for that is we've been looking at this low, the 23 low, as a low that will eventually be retested. So maybe it's coming up. I mean, that would definitely make the headlines if we get down to this level again, and an ABCD. So we'll see what happens, but that's what we're looking at. Well, not this, but we're looking at the 114, and we're looking at weakness below this level, and above that, I'm kind of looking at a sort of a consolidation area between the 144 and the 114. 114, say 119 and a half would be the 144 level. So I could add that in there. Anything you want to add to bonds, Ben?
Um, We've had our third weekly inside bar. So
Yeah, in
it's
here.
winding up,
Mhm,
winding up. Yep.
mhm.
But the move out of here should be really good.
I think so. I think so. And it's going to have huge consequences given where we are with everything else. So
Hmm.
let's watch the bonds and watch those levels. Levels are good. Um, let's see how things unwind. And the earliest sign, if you guys can remember this, is we're trying to key off this 45, and the fact that we failed at the 50%, kind of a false breaky above pretty much all the highs this year. So we're watching that, and that would be a ABCD down too. So we'll get that later. Crude, all right. So crude, speaking of levels, going off the level, right? Ran right up into our 64.75. If you guys are watch our crude segment, we've had this for I don't know, a couple of years, right? This level, probably more. Um, because it's in green, and we also have it also happens to line up with the 60 degrees down from the high. Anyway, we ran up into that and we kind of stalled. And we were talking about 61. If we lose that, we're probably going to go up and test this. But I was expecting a higher low. That if that low holds, then that's great. The whole theory about getting the flush and then moving higher would come into play. So I'm still thinking that's the case. So we'll see if we go lower. I mean, obviously below 61, now we're in a weak state. There's no question. Just in case everything slips up and not what I think, $50 is pretty much where the 50% support comes in. So that's a lower boundary, which is really not too far from 55, right? I mean, it could definitely be uh, done in a couple of days. Anyway, um, let's see if we get a higher low here on this move, and we start to move higher. We have higher lows, and we can expect some kind of a grind higher. But like we've been talking about, it really can't be confirmed till we can get above clear the 61 to 65 level. We want to get in here and start getting some bullish price action, which we haven't had yet. So we'll watch this. For now, it's under watch, under close watch.
Thing to me, Barry, is with the pervasive weakness in crude, no one's talking about the effect on inflation.
Yeah, yeah.
Because crude goes into like, I think I saw a statistic like 6,000 different consumer products.
Mm,
The come from crude oil, and
hmm.
it's going to put the pressure on inflation much lower. And I
Yeah.
wonder I wonder how that's going to play out. We'll see.
Well, I'll tell you how it's gonna play out is if things go the way following the scenario I'm talking about, it'll completely be some kind of a off the left field kind of a surprise effect, right? If we were to flip here, reverse and start moving above 65, you can hear the news is going, well, it's still low and it's going to continue. We're not going to have any issues looking at the technicals. So we'll just play it like this. And yeah, possible effects, inflation, yes. And what if these lows hold and then we flip, then what happens to
Negative
those scenarios?
ramifications for
Yeah, and how do
inflation.
we deal with that?
Sure,
So
sure.
but yeah, as far as the inflation goes, a little bit of price action, a little bit of being hanging around below 61, positive in that light, right? As far as lower prices and inflation goes. So we'll see. But nothing amazing till we can get above the 60 again, 60 degrees. And in dollars, it will be 61 to 64.75 is what we had on the daily. So we want to be, and if you notice, that's coming off that high, this high, and this weekly is coming off the 2020 low. So obviously this is a really important level. And we'll play it, we just have to kind of midway. We made a higher low this week. We'll, like I said, let's watch. It's too early to dive in just yet. But we don't really trade what we think, right? We trade what we see. So I guess that's kind of the principle. All right, let's move on to gold. We're going off the low in 2022 daily chart, and we ran up to resistance at the 450-degree level. That's clearly resistance, very close in squaring out, also very close in timing. And yeah, it's pretty close. Actually, we get a quarter square if we move it, I think. the low. Here we go. That's pretty good. And I said, long as we're above 32.53, we're very bullish. We can probably, try to go up and retest all of that. But we broke through this 32.53, which comes from the other level that we were working with, 53. This is 32.50. So right in that level. And so I think we are to watch this closely. There's a little triangle that broke to the downside and it retests, now I would say below 33.38. Is that about the quarter square? Yeah, around 33.38. I think below that, we ought to be really watching the price action in here, meaning since we hit 450 pretty hard, we want to watch the counter trend to see if we get a lower high. And if the lower high, starts to roll, we might have a high in gold. Obviously, the 450 is an important point to watch, and the sort of the false break above it, and above the level, the degree level. So 34.30 is that level up here. There we go. And like we've been saying, the gold has a long way to go for it to really turn bearish as far as the chart goes. But as far as the move goes, we went past 360 and another quarter up into the next 90. So that was a very healthy leg, and I think a decent correction. It's probably not out of the ordinary. And the 360-degree level is around 30.70. So watch that. Holding above this is just fine. I think that would give us a sort of a very normal correction before we start up again. For next week, the 32.53 is the key. If we start doing more time below that or get stuck under it, I think then we can expect probably weaker conditions. And if we trade above that, we want to see, we get some kind of lower high around 33.38. So watch that. As for gold, let's take a look at the weekly gold. Weekly gold, 240 degrees up from the November 22 low, which is kind of where the whole thing went sort of vertical. 35.42, 35.30, 35.36 is the level at the high, at the 240-degree level. So we want to watch that. We get very close to it. And this chart's been very useful as far as the weekly goes. And the fact that we got that close to it and the daily already at, we hit the 450-degree level, we want to watch it very closely. And when I start seeing sort of things go off on the daily, I normally check the weekly to make sure that we're still on the same page to see if anything else is sort of showing up. And in this case, I wanted to check, let's take a quick look at the, well, this is the weekly chart. It's 52, square 52. And we did, that high did square out coming off the low.
Timing was perfect.
Yeah, timing was very good there. So, and this chart's, gold has a nice weekly chart anyway, weekly count. You can see the 26 week or so has been coming in really well. We had a high here, high over here, and a tight consolidation. We had a high over here, and the next high is here. So it's been very rhythmic, right? In that sense. And we had price and time. So, let's watch that. What else is happening? Okay, hold on. Yeah, I won't leave the 52 there all the time, but I think it's good to bring it up when sort of we're getting some signals from other charts. And I also want to check it from the 2015 low, which was the kind of the big low before the launch. Here, I think things got accelerated from 22. And on the 52, not much. We got close, kind of like the other one. So we're up 300 degrees from the 2015 low, and pretty much the same price action, right? We went there, came back right to the 50% line. So here, this week's low is really important. We want to watch that. 288 degrees. And I think this is probably worth noticing because we really couldn't hold above it. We can see how the 3 bars or the 2 bars surrounding the high, the tail, they're all below 288. So I think there's enough things happening to notice that gold did make kind of a good high,
The only question is how good, right? We know it's a good high. How long is it going to
Mhm.
last? That'll be the question.
Well, yeah, and so we have to deal with the where it pulls back to, and that's why from here on we have to really watch where the low comes in off this high. And just because of timing and the way it is, because of the how the weekly came in to this high, now we are kind of forced to watch the lower high to see if we're going to get a lower high. And if we do get one, then we really have to be on the watch out, right? Then that means gold could have a bit of a longer correction than we've been having lately. All these 26 weeks to the highs, we've been, a month, less than a month, right? Or well, month or two would be the normal correction. So that's possibly what we can expect looking at the last, what do we got here? 1, 2, 3 examples
Hmm.
on the same leg.
Hmm.
And so a couple of months probably won't be, well, I think that'd be normal based on what we've seen. I mean, just this last leg was about a month. Here is about a month, couple of months here, 2, 3 months here. So yeah, what else could I say about this? Well, 3094 would be the next support level. We'll work with that. Yeah, that's all I have for gold. I think it's we have enough evidence for a decent correction. And just watch these levels. Like I said, the bull bear line is sort of this 32.53 level. That's the first thing we have to clear one way or the other. The other thing I mentioned was a lower high coming in, below 33.38. Obviously, we can get it higher than that, but if it's below, it'll just point to the weakness. And the 360-degree level being, really major cyclical sort of support, and that's at 30.70. So I think now we have all the numbers we need for gold. Anything you want to add, Ben?
Good coverage.
All right, thanks. Silver, we had this 33.63 on the board as a resistance level, and sort of like it's a level kind of like the level that we put on gold. If we're going to get a lower high, if it really holds below that, similar to the idea concept I was talking about in gold, this is what I was talking about. If the high comes in and the lower high can't quite make to the square level, fine. But if it can't even make the 33.63, then it's weaker than it would be stronger. And obviously, the way we're looking at the squares, the next level is this 31.56. If we have 32 written here, so let's go 31.56 just to be more accurate. So 31.56 is the level you want to watch for support. I think if we start, like you can see how the high on Friday, we basically turned at the quarter level, and which is pointing to further weakness. So if 31.56 gives out, I think we can expect probably a test of the lower boundaries of this range. I mean, the whole range is pretty tightly wound in this 90-degree square. So 50% we have to monitor closely. And to the upside, we have 33.63. Not, it's pretty tight frame.
Yeah, you've been in that 90-degree range for over a year now.
Yeah, it's. I mean, silver tried, right? We tried to follow gold, and it did pretty well. But it was also showing some early signs of weakness, right? When gold kind of blew out into the top of the cycle, you can see how silver couldn't quite do it. But kind of like gold at that 360-degree level, silver's level would be this 180-degree level at 28.70. So, above this, it's what we call a bullish consolidation, right? But it's on the positive. Let's move on to copper. All right, moving on to copper, we have well, 60 degrees was the level that we were watching. I mean, that's where the resistance came in last week, and at 495, and this week we had a false break and we flipped around. In a classic sense, this is a lower high. It came in at the right place. Here, we couldn't even get to the half 50% of the square. I think copper's taking a little break. It's slowing down, and long as we're below 495 now, I think it's going to be softer than not, right? And this 450 level, we were messing around with it forever. It's 447 exactly, but 450 level that we were talking about in the past comes into play. I would say long as we're consolidating above that, like here above it, all display. On net is positive. I think we can start moving on short notice. But the fact that we failed at 495, now we have to really watch it to see where we consolidate. We're going to do it in the lower quarter or the upper quarter, right? So above 470, above 470, it'll be more positive. I think below it's going to be softer. And obviously, if we take out 450, 447, then we can expect some kind of a, what would you say, little mini bear market, not to mention the ABCD down. So a lot of things could be setting up here. We have to watch it. And given how the high came in, I think it's worth watching closely. We're not going to be trading it on the short side, but I think it's worth watching. Looking at the weekly copper, I think this will tell us a better story. But the high came in at the 216-degree level, and after that, we were talking about a little bit of a correction and how if it can hold above 480 basis the weekly chart, that it'll be positive on the net on the whole. But we didn't. We went through the next level, 144, quick reversal off of that, and checked 480, but couldn't really hold above 480. So obviously, the lower 50% of the square is where the price action is going to be. And I would say it's probably going to be, something like back in late 2021. We're probably going to muddle in here. So if we can get above 480, we can expect, a little bit of a stronger push to test the highs. And if we can't do that, then we can, coming down to like 423, I wouldn't be surprised because we'll have to test that. This is the major level 144. And being above that, it's still okay. If you look at the greater chart, if you look at the bigger chart, we're still pretty close to the high. So that's how I would look at it. But I think this high came in pretty well on some other cycles too. I think Ben last week or a week before, or a while back, or actually when the highs came in, you mentioned that. We already talked about that. So if that's the case, we should get a decent pullback, which we did. So now, how much of a pullback, right, in time? And so it could last a little longer, especially since gold kind of topped out around the same time when the copper was getting a lower high as far as the metals go. So we'll watch that for a bit.
And we just did a weekly outside reversal down bar too.
Right, on top of everything else.
So
And
we could see some follow through to the downside.
right. So like I said, on the follow through, if we can hold above this 423 level, it'll be more positive. Overall, the trend is up. We have a solid trend line tracking this. So that's what I'm watching. Square is going to help to figure out where the consolidation is and what happens after. So, all right, so that's copper. Let's look at the dollar. Dollar, last week we talked about potential low coming in because of the cycles. And let me get rid of some of these levels here.
Hey, Barry, it didn't go to zero like everyone said it was going to zero. What's up?
Yeah, I remember that, right? Yeah, it didn't go to zero, but this 90 definitely got the came in around the low. So I think the thing here is, and we got to the 50% of the square, little flush, reverse immediately. I think it was a false break off of that low is what happened. So far it's acting like that's pretty much what happened. The 90 cycle came in. We also did 90 degrees, right? I showed you guys the chart last week and I put it back. So that's how it really looks. And the fact that I think the low came in right there where the mouse is pointing, and then we had a false break up, then we had the higher low. So the setup is clean, like they say, setup is clean. And now we're consolidating sort of perfectly in that bracket between 99.88 and this 50 cents here. So, and we're making higher highs right there and higher lows for now. That's kind of what we're watching. I think the timing came in. So, and we talked about, I had this 90 degrees showing last week. We caught that right on time. And the 90 we talked about before as we were coming down, once we lost this, I was looking at that 50% level on the 60. So let me go back to that. You can see that chart is very active and it's good because you can see where the 50% came in right there. So we got to switch between them. It's the same vibe, it's the 30s, but it's good to go to the 45, some 90-degree chart, get some clarity. So we had 90 by 90, 90 in both in degrees. And now, the expectation is to somehow get to this 102, 102.60 level is what we want to see if we can hold all this. And obviously we have to clear 100 first. And so looks good. It might not all be very clean. We might get a little bit more shakeout here, consolidation above the 50% level. That would be ideal. And if we take out the cycle low, because it came in on the 90 and in both degrees, solar degrees and in price, well, then we're going to have a lot more to deal with. we'll wait for that. For now, it looks like the low is in place, so we'll trade it like that. Weekly dollar, we've looked at this chart before, and there's 98.25. We talked about that being support, and sure enough, it held a couple of weeks, and this week we started moving higher. So everything looks good, and that ABCD completed down here, close enough, I would think. I don't know if you guys can see that. So right there, we had an ABCD getting very close to completion. So I think that's kind of what we have to deal with.
And the thing with the dollar, you had the technicals, the geometry, all that lining up, and sentiment couldn't have been more negative.
Exactly. Remember, didn't you send that some kind of headline cover?
Yeah, it was the Economist cover on the dollar. I sent it to
Right,
you.
right.
I said, "Hey, here you go. There's your
Mm-hmm.
bell ringer."
Classic. So yeah, and it's great when we see that and we see cycle lows coming in, and squares happening about the same time. So I think that all worked out. The upside base is the weekly. So 102 is where the 50% level is of the square of the range. So we're not out of the woods yet, but if we are doing an expanding triangle, well, we're at the bottom range of that. So just using these 2 points, which means we have more to go to the upside. All right. I mean, hell of a setup, right? For the rest of the year, all of this. We'll see how it all turns out. Moving on to the euro. We looked at this Gartley pattern last week. Oh yeah, because of the ABCD we had drawn up prior, right? So, which was also about the 50% level, 135 degrees up. And I said, if we we can't settle above the 50% level and we fail in that zone. The failure zone was this gray area, shaded zone. That should mark the high. So looks like it did. We've traded lower since then. And this little triangle broke to the downside. So it looks, I think, just like in the dollar. I mean, it's mirroring because here's the 90 degree move up. Looks like the high is in place, and the next test is really at the 90-degree level, which would be around 106.37. But let's watch for that. I think that's what we have to watch. This is amazing. I mean, whatever reason these happens and how it gets, at least the people not in the know get caught in this holding the bag is amazing how it just continually does that. I think that cover came in exactly when that high was in place. So unbelievable. That side of timing, right?
Mm.
All right, let's take a look at the weekly. Weekly, pretty much the same case. I talked about this 90-degree basis, the weekly chart coming off the 22 low is really important. And that level happens to be 1310, let's say 1311. So once we get below that and get stuck, I think it's definitely softer conditions for the euro. And if we take out this 109.50, that'll be the next sort of the sign, right? So anything over here, any bounces that get stuck at the 90-degree level, which is that 1310 or 1311 level, that's going to be You mark that. Yeah, I think it's softer conditions below that. So watch that. ABCD completed, the Gartley completed. So we're in good shape. And another turn might be in place. We called it out, but a little bit more downside would be nice.
Mm-hmm.
All right. Looking at the Hang Seng. Well, we continue to take the levels and behaving in a good way. I mean, it's bullish. So this 21,560 was the 50% level. It's fact, it's the 580. It's the 50% level. And once we gapped above it, we held really well above it, right? In that direction. So, and I said, as long as we can hold above that, we'll expect it to go up and test this 22,710 level, 22,710 over here. And that's kind of where, the Dow, the S&P, we have all the overhead, right? So this is that same neckline for the Hang Seng. All right. So that's the neckline. So let's see how it plays out. If we can take out that level, I think next test will be close near the highs, 24,086 up here. And goes without saying, any pullbacks, holding above 21,560 would point towards stronger Hang Seng. You covering natural gas this week? Looks like we're coming off this quarter square, doing
Yeah,
okay.
definitely going to cover it.
Okay, good. So it looks good. These lows we talked about last week, quarter square,
Mm-hmm.
winding its way back up. That's it for me. Let me put it back to you. We'll catch the rest of it. Well, that 19,000 level we talked about last week, 19,000, 20,000 level, and we cleared it nicely with some force on Friday, right?
Yeah, I mean, it gives us the opportunity to, have a pullback and still get a full bar over. Because even though we closed above it, we still, we're crisscrossing it for the last 3 days. So let's see. I mean, yes, we're up here, about the quarter square, three quarters of the or quarter of the square here. That stopped it on Friday, but it is powering and it's powering up, into a significant cycle window. So we got to watch and see. As I was saying with the S&P, I think I feel the same way about the NQs. We got to keep going. It can't just sort of hang around here, because if we hang around here, we have a lower high, lower high than the that first pullback off of this down move. So we want to see that's going to be the next interesting spot, which is around 20,550 and then 20,650 up here. That's the next big spot, as you can see why, because we have all this overhead here. But we're certainly pushing. So we were pushing up. You can see here we were pushing up over the half square during the week, had a pullback, little shakeout here at the half square, and then reversed right up. Some interesting timing, Barry, that I wanted to point out. 72 calendar days from the lower high puts us right May 1st, and 144 from the all-time high back in December puts us on May 9th. So this coming week we have a 144 calendar day time. So we'll see if that has anything to do. The key levels this week, the 19,925 on the downside, 20,642 on the upside. So we watch and see how price acts around those two important levels. Let's take a look at the weekly. So the weekly we got another up bar. We're closing, right near the high of the week, which is generally bullish. The next big level here is the 21,000 level, and that's this half square and this, all this 6, 7, 8 week overhead that we're going to come up against. But it can get there in a day or two, the way things are going. On the downside, the support is 18,000 on the 90-degree full square level. So we'll watch and see. Do we get another up bar this week? Do we get an inside bar that could then give us clues for the following week? We want to really stay on top of that and watch that one.
Right. And what's your quarter square level there in the middle?
Uh, yeah, right here it's around 19,670.
Okay.
So you can see that's right where we were straddling last
Hmm.
week. Let's look at the monthly. Get a look there. We've already made a higher high this month, so that's on its face bullish. I mean, we got obviously have a long way to go for the month, so um, if we do have an up bar here, we want to see, can we put together consecutive up bars, or do we just have it? Does it end up just being, a one bar counter trend if we reverse the month in June?
Hmm.
So it's a ways away. We'll have to see. As you can see, we're between two important levels here. So you got to drop down to the lower time frames to get some real sort of levels to deal with. I think the daily is the most useful one, knowing that 19,925 is your important level on the downside and 2642 on the upside. Anything you want to add in here?
No, I think we're good. I think you covered all the key points, key levels, and we're good.
Yeah, I mean, and again, we got to keep moving higher, or else the bears are going to be emboldened and push it down. So I don't think we're going to be just sticking around the same area next week.
Right, right, right.
So it's an exciting week coming up, I think, based on the way the setups are.
Exciting
Let's
month.
Yeah, let's look at Bitcoin. Bitcoin's
Month.
in a really interesting spot, and I love how harmonic it is with these squares. We did this ABCD last week. We put that on and said, "Oh, be careful here. Let's see if we get a correction off of this." And you can see we just went sideways, pushed right up, and now look where the battle is. Today's low is 96.6 area, right at the full square.
Hmm.
So if we can hold this full square at 96.6, 102.434 is next.
Hmm.
And we can push up there. So this is a really important spot. Because if we lose this spot, theoretically, we could say, oh, we have a lower high compared to the high here, and now we're rolling over again.
Hmm.
So really like to see us hold this spot and then push higher, because if you look left, look at all this price action we were messing with for a long time. From
Right.
November, roughly December until March, we were in this
Hmm.
range. And so now we're poking into it. Let's see. Well, we know 96.6 is the key number this coming week.
Hmm.
Get below it, more correction, sit on top of it, we're rallying, and we could push conceivably to all-time highs. So let's watch that. Let's take a look at the weekly and see what perspective we got there. Key thing, we got our first bar completely over 89,540, so we've cleared that.
Yep.
And now again, weekly basis, as long as we're above that, we can push to the all-time highs. So let's see how that weekly plays out. Let's take a look at the monthly since we printed the new bar. So looky here.
Talk
Last
about
month,
clear and hold.
yeah, last month we came down, touched this 74,500 area, which was the low of the month, and the bar, held the full square. In this case, it's the 36. Then we pushed higher, and now so far we got a full bar over the 93,000 level, which is this half square.
Mm-hmm.
So monthly basis, we want to stay above 93,000.
Hmm.
If we start crisscrossing it, then you drop down to the lower time frames and you can see where the resistance is and where the support is. But it's 3 days old or 2 days old, this bar. So, we got a long way to go for the month, but the 93,000 is important. And holding above that is a positive sign to pushing to all-time highs.
Hmm.
Anything else to add here on Bitcoin?
No, we're good.
Okay.
Let's see.
All right. For the commodities, we're going to start with corn. It's an interesting week in the commodities. There's this inflation deflation battle going on, and you can see it in the metals. You can see it in some of the softs and in crude oil. The fortunate thing is the grains are continuing to act positively. And the first one we're going to review that we had on the board is corn. Wheat is still going sideways on its daily basis, so I don't want we don't want to mess with wheat yet. I'm waiting for a good setup, and then I'll bring it up. For now, let's stick with corn. Corn, you can see this past week we pulled back and corrected, held the lows, held this trend line. If we can reverse here, and push up, then it'll give us, again, another higher low and a higher high. But the lows are coming right here, which could be expected, based on structure. As long as we hold that and can hold the trend line, we can look for higher prices in corn on the daily basis. Let's take a quick look at the weekly.
Mm-hmm.
So the weekly, we got our first pullback bar here. Obviously, when we get next week, if we can take out the highs from last week, we'll have the reversal with another higher low. But maybe we have to, slide over and pull back a little bit more. This looks good to me, though. We're just pulling back off of this, this little lower peak we made here. So
Mm-hmm.
almost a triangle forming, right?
Yep. Yep.
So let's see if we can get a bullish resolution on a weekly basis. 517 is the key number. We want to get above that, stay above that, and then that opens up the higher square here, the 52.
Right.
All right, let's take a look at the monthly, and you could see, Barry, the important thing here on the monthly is in April we got the monthly reversal.
Right.
So we
Mm-hmm.
made a higher low and a higher high in April, and now in May, what we want to see, this new bar that's 3 days old, what we want to see is we want to stay on top of this full square at 463.
Mm-hmm.
Super important because it clears the square number one, but as you can see, going back here, it puts us on top of this 6, 7 year consolidation we had before we took off.
Mm-hmm.
So it's a very important level. Monthly basis, we watch 463 to stay on top of that. Anything you want to add on corn?
Well, after that, after the low and coming up this high, getting up to the 144, now in time. So correction seems reasonable, right? And we only pulled back 36. So I think it's on the move. We got to watch that 451. Long as we're above that, I think we're in good shape.
That's exactly right.
Mm-hmm.
So let's watch it. Let's look at another grain we've been talking about, which is beans.
Mm-hmm.
And beans just keeps doing what it needs to do to look positive, right?
Yep.
We called out the higher low here late last year.
Mm-hmm.
We did this ABCD, pulled back another higher low here in late March, early April. And now we pushed up, and look what happened when we came back to
Yep.
test this full square.
1035. Yep.
Yep. 1035 was a big number
Beautiful.
we talked about last week. Tested it for 2 days, got the reversal. So now what we want to see is we want to see this high get taken out here, which is called 1,068, and then this level here, which is around 1,080, and then we're on the way to 1125, the half square. But it's doing what it needs to do, right? Flat at first, now it's getting a little steeper, and this is when momentum generally kicks in.
Yeah. And I think once the ABCD gets taken out, it'll probably accelerate.
That's when we move. Yep.
Mm-hmm.
All right, let's look at the bigger time frame, see what they're showing. The weekly is showing that we're still battling. Let me get this chart. There we go. It's showing we're still battling at this 1,060 level, and you can see why it's pretty important. There's a couple months worth of price action. There's a couple weeks here where it couldn't make it. So we want to push through 1,060, this half square, sit on top of it, and then 1,200 is your next target. So the battle is still ongoing. We closed the week at 1,058. 1,060 is the key number. Anybody who's watched this show for a while knows that happens all the time in many markets. So
Yep.
Next week, let's watch and see. Actually, if we take out this week's high next week, it'll give us, a
We
one
go.
bar
Yeah.
pullback and a
Hmm.
reversal. So
Yep.
let's really watch this closely this coming week. Let's look at the monthly. Well, your monthly is right up against it. And Barry, the important thing is we did our outside reversal.
Yeah.
Outside reversal on a full square support, the 36 in this case at 983. Now we'd like to see make a higher high, punch through this downtrend line once and for all, and then get us going. And
Hmm.
you can see this little box here we've been in for, I don't know, since when? Last June, July. We break out of that box, then it's just like the weekly, it's put you up, the next target's up in the 1200s.
Hmm.
So beans looks the best of the grains. You can see why. Anything else you want to add here on beans?
No, it's perfect. Perfect coverage. We know what's happening.
Yep. Yep. All right, let's go to the next one. This is the sleeper, but man, it's acting good. So
Hmm.
cotton's been going sideways for a long time. We talked about, this low came in, it squared out. It was sort of many little three drives, one, two, three, and then quickly reversed. So we were drifting up. We called it early. We had this little pullback, and then look what Friday did.
Hmm.
This is Friday's bar, right?
Yeah. Yeah. Yeah.
Took out basically the rest of the week's price action, and just
One shot.
reversed one shot and reversed nice and hard. So
Hmm.
we want to see us take out the high and the high, call it, just under 70 right there.
Hmm.
Let's see what the exact number is. 69.48. Or let's see, no, sorry, 69.75. We take out that high this coming week, then we've got a low, a high, higher low, higher high. It's just acting well, after this false break low that we had on the full
Mm.
square. We know it was early when we were calling to people's attention, but now we're starting to get the price action that you like to see when these make a low. By the way, remember we were talking about sugar before? Sugar, we said it was early. The daily took out the ABCD low and the full square, so it's got more work to do, and it might set up as a good short. So
Mm.
for anybody who's been watching and staying with the story, sugars, that's the reason you're not seeing sugar is the long setup has been invalidated.
Hmm.
Let's look at the weekly in cotton. So the weekly is battling at this half square. That level is, I should have that on the chart. 66.41. Let's put that there so you know. That's an important level.
Hmm.
We want to stay on top of 66.41, and we're fighting the last few weeks to do that. Next
Right.
week, if we again, just like we were talking about in, I think it was beans, if we can have or corn, if we can have a higher high next week, we reverse on a weekly basis, right? Because we had a down bar this week, take out the high next week, we reverse. But the weekly again is shaping up, right? It was heading down, down, down. Had this big inside bar, then an up bar, one down bar, closed at the high of the week. Take out the high, this week's high. We should be on the move here as well.
Hmm.
Let's look at the monthly. The monthly shows we didn't get the outside reversal. We did have an outside bar, but the close was just under the high from the previous month. So it wasn't the outside reversal we had hoped. But if we take out the high from last month, and the high from last month was 69.75, which is not too far away, we'll have a potential monthly reversal happening, which is big.
Hmm.
So that's cotton. I'm intrigued by it because of the sideways move. You can see the extent of the sideways as you look at the longer time frames,
Right.
right? And we've just been drifting here for a while. It's what it kind of likes to do. And this to me th seems like it's setting up for a decent move higher. What do you want to add here on the cotton?
Well, I think it's set up just perfectly. Yeah, you covered everything. Nothing much to add. We're gonna watch it. Obviously, we have to clear that level. Once that happens and settles on top, should be faster.
Yeah, it'll be a lot quicker once we
Mm-hmm,
clear that.
mm-hmm.
Because basically that clears all price action going back, November, December.
Right.
All right, let's take a look at the next one. The next one we've been talking about for a while has been setting up was the coffee short,
Mm-hmm,
and I wanted to show you what it did. We grabbed part of this move down into the low here, and
mm-hmm.
we said, hey, it's time to cover when you get into this support area. Let's see what the next thing is. And we had a pretty strong move up, but look what it did. It did an ABCD right into a high and
Yeah.
reversed,
Yep.
giving us a lower high.
Mm-hmm.
So I'm watching. I didn't play the reversal yet. I was trying to be a little more cautious because we're above this 378. If we get some sort of another lower high in a reversal, or we get stuck below 378, this is going to be back on the short parade.
Right.
When you make a square out like this on a full square, a big number of 180, and then you make a lower high, it has to get your attention.
Mm-hmm.
Doesn't mean it's going to collapse, doesn't mean that the short's 100% guaranteed. It just means that you got to start really, really watching this because, a lower high off of a full, an important square usually gets you some kind of movement. Probabilities are in your favor.
Right.
And we did this ABCD up and reversed hard.
Mainly the ABCD. Yep. Yep.
Because this is like a corrective move that then reverses. And if it is, here's your first leg down,
Mm-hmm.
second leg up. We could be coming into the third fast move that we try to find.
Right.
Let's look at it on the bigger time frames and see how they look. Here's your weekly. So weekly
Mm-hmm.
shows that we failed at this 410, right, which was the full square, 312 degrees up. Giving us a visual of the lower high. Again, why 384 is so important. And look where we closed, Barry.
Yep.
380,
Right
350.
under.
Yeah, keep you
Mm-hmm.
guessing, right? So again, let's see if we get stuck under here. If we do, it adds to the evidence that's compiling that this was a good square and a big time square out that we're going to get a reaction off of.
Mm-hmm.
What other chart looks like this that you were talking about? Kind of looks like gold, doesn't it?
Yeah.
That
Yeah.
that move up in gold.
Yeah. Absolutely.
So let's see. Let's see how it goes.
Mm-hmm.
Let's take a quick look at the monthly. Here's your monthly. We had the down bar, the monthly close right on the full square, the 90, which was 403, and now we've
Mm-hmm.
got this full bar under it. So again, it's all kind of setting up where we don't have, you know, 99.99% probability that it's going down, but a lot of evidence is starting to build that we could get a decent move down. I mean, we could come all the way down, to here, to this level, like
Mm-hmm.
around 300 to 310, and it's still bullish, right? Because you're sitting on top of previous peaks. But then
Mm-hmm.
from 383 to 310 is a hell of a nice move.
Right. Absolutely.
So that's kind of the play here. Let's see how it plays out. If we get a bounce that fails, it could be a trigger point. If we get stuck below 378, it could be another trigger point here. Anything else you have to add, either supporting or cautionary about coffee here?
No, we're good. I think you pointed out all the important things. 378 obviously important for continuation. So the overall pattern looks good. I mean, triangle broke to the downside, then came right back and almost broke to the upside. Now let's see if we can get the right direction.
Hmm.
Um,
We'll see. Well,
mhm.
this next week will give us a lot more clues with price action from the week. So
Yeah,
we'll watch
yeah.
it closely.
Hmm.
All right, let's go to the last one. Our old friend Nat Gas. Look what Nat Gas did, Barry. Did a nice corrective ABCD down
Another ABCD. Yep.
and then launched out of there.
Yeah.
Now the thing that I really liked was okay, we saw the ABCD and I said, okay, let's see if we can push out of here. And we got to push up and then I said, oh, we're getting stuck below the half square. But look what then happened. One day down and then strong move up, clearing the half square at
Hmm.
341. So right now this looks good, right? The lows came in. Look at the structure here. Good
Hmm.
structure, right?
Hmm.
Took out this little low here with a little nice false break to boot. That's always nice to have that, right?
Yep. Yep.
And then we got a strong move out of here. So let's watch and see if we can stay on top of this 341, 340 area. $4 should be next. And then we're building again, right? And we're building.
Right.
But we got that this is why we look for and try and be aware of and closely monitor these ABCDs because you get these fast moves when they're good.
Hmm.
And we pushed right out of here. Now let's see what the next, if there's a next pullback, can we sit on top of 341, 340 area? If so, four looks good. Let's take a look at the weekly. Weekly's coming up on a really important spot,
Yeah.
371.
Hmm.
So weekly basis, this week, let's watch. Can we push through this? Can we push through and get a weekly close over 371? Because you don't want this to happen, right? Come up here, fail, and then it's back down again. Look at that. You
Right.
can see the false break on the weekly, man. Look at that. Isn't it great how that always happens?
Hmm.
It happens so frequently. And then like a bat out of hell, it shoots out of there.
Yep.
So weekly basis, let's watch 371. That's the key number for the coming week. Let's quickly look at the monthly. There's your monthly. We had a down bar last month. No surprise with the pullback. Now we got to see, it's early in the month and we're inside, obviously, all of last month's action. Want to see the monthly bar get taken out, which is around 417, 416. If we take that out, then you got a monthly reversal. So all in all, it's not screaming out of this low, but it's been grinding.
Hmm.
And you grind, and then you get one of these, or one of these, or one of these.
And the triangle broke, and we ran after the 50%
Hmm.
correction. I think it all looks normal, right?
Yeah. Nothing super exciting yet, but it's
Hmm.
okay. You can bank these moves. Anything else you want to add on Nat Gas?
No, we're good. Good to go.
Okay. I know the show is long this week, so we're not going to have any end of week discussion. Just know that Barry and I were talking. We're in a major cycle window. A lot of markets, as you can see, have pushed into resistance or are sitting on top of support. So pay close attention in the next week to price action and try not to have a bias about which way you think it's going to go because as you and I've been talking about, Barry, man, it's just been a crazy year, and if you think it can't happen, it'll happen.
Yeah. Yep. That's for sure.
So please make sure to like, ring the bell, set the alerts, share the video, and help us grow the channel. And listen, rest up this weekend. Have a great weekend, everybody. Great job, Barry, and we'll talk next week.
Talk to you later. Good job, Ben.
Thanks, Barry.
Bye-bye.
Take
Hmm.
care. Bye
Bye-bye.
bye.